This was another very frequent comment that I got in that video where I explained the difference between median wealth in Canada and median wealth in America. And a lot of people said this. They said Canadian wealth is artificially inflated by the real estate. And that is something that I'm very well aware of because I'm a homeowner. Yes, for the racists in the comments, this brown guy owns a home in Canada. I digress. Anyways, moving back, I agree. Yes, everyone knows Canadian house prices are kind of insane. That's a fact. It's overvalued. But let me walk you through a couple of numbers. Right, so this was the latest I could find. The home price to income ratio is about 9.2 across the country. All right, so it's a little bit higher in Toronto and Vancouver, and a little bit lower in like Ottawa, and very low in Edmonton, Calgary. But overall, across the country, it's about 9.2, which is a bad ratio. All right, that is too high. It should be preferably somewhere around 5 or 6 or maybe even 7. That's like an affordable ratio. 9 is too high. Now, this number is going to, come down because house prices are coming down. So this is going to improve a little bit. It's already improved from like 10.5 last year to 9.2 this year. I'd say under 9 by the end of this year, by early next year is possible. But what you've also got to remember is across the border in the US, they're not as exposed to real estate because of their housing crisis in 2008. A lot of people lost their homes, unfortunately, don't have as much in equity, and they've been scared off from the real estate market. So since 2008, what they've done is the majority of their wealth has gone towards stocks. It's gone into passive index funds. They've been putting it into passively investing in ETFs, most likely the S&P 500, which is trading at a record high. Like the ratio of price to earnings for the S&P 500 overall is 32 right now, which is extremely high by historical standards. It was only higher in the run up to the 2008 bubble. All right, it was that high during the 2001 bubble, the dot-com bubble. Now, of course, they've got a new one. They've got a new tech flavor of the year. Artificial intelligence, AI, and anyone who can put a bot on a presentation gets a valuation like this. Tesla is trading at 256 times earnings. 250, and earnings are declining. They're not growing, all right? If you go back and look at earnings in recent quarters for Tesla, they are actually shrinking because they're losing market share pretty much across the world. And this isn't some small company. This is like the 5th or 6th largest company on the S&P 500. It's part of the Max 7, which has contributed most of the gains to the S&P 500. It isn't the only one. There's stuff like this. Palantir entered the S&P 500 just earlier this year. All right, it's trading at 850 times price to earnings. 850. Now I understand. Okay, it's an AI company. It's preferred by the administration that's in power right now. It's going to get very favorable deals from the government. But all that considered, this is insane. That is an insane valuation. All right, and anyone who has any money in an index fund, in an S&P 500 ETF, or even just doesn't even invest in stocks but just has money in their pension fund, is exposed to this. This kind of nonsense is everywhere. There's nuclear companies that haven't even made revenue and are trading at 18 billion dollars. They have no revenue. They just have promises of revenue in the future. All right. So yes, I agree that the house prices are inflated in Canada, but it is nowhere close to this nonsense. This is a bubble. I'm just going to say it. All right. And the valuations are way crazier. Trading at 850 times price to earnings is way worse than trading at 9 times price to earnings for a house.